So today we've got Mark Mackenzie. He's the founder of Megapont NFTs. He's been in the industry for a very, very long time. Coder, super interesting conversation here, Dragon. What's a key takeaway that you got from talking to Mark?
You know, it's very interesting. Obviously, interesting times, always interesting times. But Mark is kind of like a historian / sommelier. So it's pretty interesting to hear somebody that saw all of this unfold. So, you know, my biggest takeaway was that there are some great options right now to get on top of this NFT game and also make sure that you're safe and secure during what might be this winter. So awesome episode.
Well, and I really like that Mark isn't just coming on here to shill and say, buy this, buy this, buy this. He's saying like, watch out for this. This is a red flag. These are things to look for. And I thought it was super productive. There is some technical jargon near the beginning of this episode. So if you want to keep up, just go to nftsmadesimple.com. We're going to have a cheat sheet with some of these definitions so you can keep up. There's five or six different definitions that are a little technical. So go to nftsmadesimple.com to get your cheat sheet so you can keep up. Dragon, what do you say we make this thing simple?
Let's do it. You're going to love this episode.
NFTs are changing the world, and change can feel complicated and scary. But listen, you don't need a computer science degree. You don't need to learn how to code. You just need practical skills to win.
If you are here, you are in the 1% of humans that are preparing for this major cultural shift. We're going to keep it fun. We're going to keep it light. We're going to make it practical. Welcome to NFTs Made Simple.
Just a reminder, we're not financial advisors. This is not financial advice, and you should do your own research.
Hey, let's get into it.
Yo, Mark, welcome to NFTs Made Simple, brother.
Awesome. Great to be here.
Yeah, Dragon and I are here. We're thrilled to have you here, Mark. And, you know, you came highly recommended by a respected friend of mine, Chris Castiglione. And he said, we were talking about crypto, we're talking about NFTs. He said, Mark, you got to get Mark on the show. I said, me? I'm already on the show. He said, no, you got to get Mark Mackenzie on the show. And I said, all right, well, let's get him on the show. And you're here. So Mark, why don't you give us a little bit of background? Tell us a little bit about you, how you got into blockchain, NFTs. Just kind of give us a quick history here.
Yeah, sure. So I've been involved with crypto for almost a decade now, which is, you know, a long time in this industry. So I was involved with, let's call it like the early accelerator incubator boom for startups way back like 2010, 2012, you know, when everyone was kind of building a startup. It was around the time that Instagram was actually acquired by Facebook for $1 billion, which at the time was crazy, right? It was $1 billion. This company has 10 people, it has no revenue. How is this real? So there's a real boom at that time of kind of early 20-something software engineers who were like, hey, I want to, you know, build a startup. This looks like a cool world to be a part of. And there was an abundance of accelerators and incubators all over the world, really. So I was part of, I guess, that cohort of engineers who became founders. And Bitcoin was, you know, it was kind of talked about in all of these lofts where all of these hackers and developers were kind of getting together. And it was still really hard to use. You know, there weren't many exchanges. Mt. Gox was kind of the big one we all used at the time. So there weren't many exchanges. It kind of had really no use. But everyone was starting to think about these really sort of big philosophical changes it could have to monetary policy and finance moving forward. But that seemed decades out back then, which is crazy to think. You know, looking back 10 years ago, I wouldn't have imagined we'd be where we are today with Bitcoin and crypto as a whole. It's quite funny. I actually had an email back with Brian Armstrong from Coinbase when he was just joining Y Combinator. And at the time, I'd said to him, I was like, I'm okay moving all my crypto over, but I was like, how do I know you guys aren't going to be acquired? Because at the time, every Y Combinator company was just being acquired. And he just mentioned some of his ideas around, I guess, generating revenue and become profitable, which was basically at the time, hey, we'll charge for the API, because no one knew how on earth you would make any money from this. And being a market maker was almost like a pipe dream. There's no way there's going to be enough volume in crypto to kind of pay people salaries and make a meaningful company out of this. But you know, here we are. So
hey, before I want to hear more about this, explain a little bit more about the API model for all us, you know, let's make it simple here.
Yeah. So basically at the time it was, hey, there's not enough volume to be made by selling and buying Bitcoin because it just was so small, right? So the early revenue models were, we'll charge access for people to use a Bitcoin node or use data on chain. And really that was, as far as innovation went in terms of like revenue models at the time, this is like 2012, people were playing around with things like marketplaces and stuff like that. But all of the core marketplaces were really struggling with like meaningful volume to build like a big business. So, at the moment you see Coinbase making money by fees, like it's charging a small percentage. But back then, if there's $1 million of volume a year, you're not making much in terms of fees, right? You're not paying one engineer. So yeah, I don't think even, industry veterans could have imagined that we would be where we are this soon anyway. So that was my early journey in crypto.
That's, it's super, super cool to hear a little bit of history like that. And thanks for sharing that. What it made me realize is why people back then foolishly, dropped their Bitcoin. I mean, there's like this story about this guy that, bought like 2 pizzas with like 10,000 Bitcoin. It's because that was not on the radar. It was almost like what was starting to emerge, it sounds like, was like just gaining access to this blockchain, So wow, man, that's crazy, because I always think about these. I'm like, you fool.
The forgotten wallets. Yeah, well, I mean, Mt. Gox, the largest exchange at the time, when that went into liquidation, they took a whole bunch of Bitcoin, and most people I knew would have like 50 to 100 Bitcoin there, right? And they kind of just wrote it off as a loss. Like, oh, hey, this is like a couple of $1,000s. I played around with a technology that was early. I'm going to write it off. Well, now that isn't a couple of $1,000s, right? It's like a real amount of money. And, a lot of people, including myself, would be paid out from MTGOX. Hopefully it won't be the full amount, but, that's a whole bunch of liquidity coming back onto the market that everyone kind of wrote off as forgotten about. So people weren't just doing that. People were committing like their keys into GitHub and stuff like this because, we just didn't see that a Bitcoin would be worth so much so soon. Well, I didn't anyway, personally. Some of the people might say they did, but not myself. I wouldn't have imagined we'd be touching $50,000 within the decade.
Well, I don't know, but by the way, this is being recorded timestamp on the 12th of May. So it's crazy to think somebody that comes into crypto today and sees what Bitcoin is at, and if they hear someone say that it was at 60,000 once, they'll be like, you're out of your mind. Yeah, so it's funny how things go up and down. Mark, tell us a little bit about, what an amazing bit of historical access that you have to this whole thing, but something made you stay in, because there wasn't a lot of money to be made back then. Take us kind of like from then till now, like what is it that made you go all in with it to the point where this is what you do full time now?
Yeah. Right? So, around 2015, I kind of put those golden handcuffs on, right? So I'd had my first child, and my partner said, this entrepreneur way of living is great until it isn't. And now we got a child. So, hey, let's think about some full-time employment. So I joined a really great company as the head of data science there. And I spent like 5 years there. And all through this time, when you join these kinds of startups, they're very entrepreneurial anyway. Everyone in them has a side project. They're all doing something. They're playing with something. And I do advocate for people to join those companies as opposed to like the large global conglomerates where there isn't much innovation. So we're playing with crypto. We were around for the ICO boom in 2017 and played around with all crazy alts and, engrossed in white papers at the time. And then after that, I founded a company called Arcata with 2 friends, Matt and Tom. And that's a KYC platform for the art world. So you're going to see how I come into NFTs here. So what they are doing is basically making it easier for art galleries and artists to do KYC, because in the EU, by law, you have to undertake KYC on buyers if a purchase is over $10,000. And we're talking like 2020, people started coming to me and being like, hey, have you heard of NFTs? Like, are you doing anything for this? And it was kind of new. And, there was the crypto punks at the time. And then we started getting some big clients talk about things like Beeple and stuff. And it was, okay, these are making some noise. And I was obviously still invested in crypto, but even then I was like, I just don't see these becoming like this big cultural thing. I understand the collectible aspect. I'm quite a collector myself. I've got like some graded Pokemon cards and stuff like that and very nostalgic, but I couldn't in my mind picture digital collectibles or NFTs becoming mainstream. And I think I was missing the community aspect. That's the part I missed. I thought it was just a digital Pokemon card, right? And I have ownership and that's it. And I was like, that's kind of boring. but it's far more than that. I mean, obviously that exists in the form of art, but people have been collecting art for thousands of years anyway, so that doesn't change. But like the PFP collectible stuff, I didn't quite get at the beginning. And then in the summer, I spent some time in the Bored Ape community trying to be a middleman in an auction purchase when they needed someone to introduce them to a big auction house who had a KYC contact. So I spent some time in the community, and they were able to raise like millions in hours in some DAO. And I remember just basically being a passenger waiting to make some introductions and thinking, these guys are crazy. Like they hadn't talked about who was getting what they were going to do. They just didn't care. They were just like, oh, let's all pile together as a community and try and buy this thing. And we'll worry about everything afterwards. And that's when it clicked for me. And so that was like June 2021. I was like, there's so much more to this than just I've got some on-chain ownership of something. And, as a founder and I guess as an entrepreneur, I've always had that network. So I got a group of friends together and we were like, hey, let's start a project, but not abuse any of our connections or influence anywhere else, and just try and build a community and focus on that. So first and foremost, and I think I still believe to this day this to be true, that the art is secondary, especially on collectible projects. It's more about the community and what the project's grand vision is, like what the hell the project is trying to do. So I was like, let's focus on the community there, try and build an awesome community, and then do some really cool, innovative blockchain stuff that innovates and brings that to the community. So that brought us to Megapont, and that was October of last year. And I went full time earlier this year, so got rid of the golden handcuffs and went all in on Web3, really. I wouldn't say I'm all in on an NFT project on Megapont. I'm mostly splitting time between there and building tooling to make it easier for others to build in this space. And, I've helped a whole bunch of other projects as well. But it's very exciting for sure. And I do feel very fortunate to be able to work on something that, I'm truly passionate about. And that is a lot of fun because, for 5 years, I've enjoyed writing software, but you're not passionate about those industries most of the time. So to hit that sweet spot, it makes it very easy to wake up in the morning and get some work done, right? Which is fantastic.
I just want to jump in and first of all, I'm enjoying this thoroughly, just because of the, the experience that you had. Mark and I'm a 50-year-old dad, and I've been involved in crypto for, I don't know, I guess about 4 years, but NFTs, like in large, probably about 2 years. And I'm just thinking like, this dude was in crypto like a long time ago. I got my, how everybody gets that text from the guy that said you should buy Bitcoin and they didn't, like that happened to me in 2015, my first foolish move. But, you said something about, and I would assume that you noticed this maybe when you were doing that middleman work at Bored Ape. You said something that I think a lot of people don't understand. When the people that struggle with understanding NFTs are the people that look and say, why would you pay that much for a picture? And then, hopefully they'll get to learn a little bit about the blockchain and all that stuff. But you said something that I think people really need to understand. And this also gives rise to why, Mark and I are trying to simplify the idea of how you should approach buying NFTs. But it's the community thing. It's like when you see somebody and they have a Bored Ape Yacht Club, you could look at that and say, I don't get it. Or you could say, oh, they're just, flexing that they have money. Or you could say, I understand the value because they're part of this crowd. And in that crowd, you get access to this and this and this. So that's an important piece of it, and yeah. Mark, I'm sure you're thinking about that as well, is, if we were to launch NFTs one day, it wouldn't be only because people want to make money off of NFTs. They would have to want to also get access, hence the concept of access tokens, to the community. So awesome.
I find it hard sometimes that individuals can't fully grasp the idea of NFTs and communities when almost everyone at some point in their life has been part of a club or a community that's meant so much to them. Whether you're at college or in your adult career, or even, you're part of like the local golf club, bridge, or you've got like...
Or wearing a Manchester United
Yeah, exactly.
jersey.
You go to the football on a weekend and you are part of like a large community. And it's just the digital equivalent, I think COVID maybe made everyone pause and just think, hey, yeah, we're spending a hell of a lot of time online these days. It'd be great to have this digital community. And it's probably, plugged a gap that many people thought they were missing in their lives. I've been a gamer as well for a long time. And it was very easy for me to transition. Like I'm still friends with like my old gaming group. We've known each other 10 years now. Unfortunately, we've all got kids and proper jobs, and it's like we don't game anymore, but we still have WhatsApp and Discord, and we're still talking about a whole bunch of stuff. So it's very easy for me to transition from that to being part of NFT community, which is weird.
Those things, Discord, WhatsApp, that's called adult gaming.
Adult gaming, yeah. I remember I used to be big into powerlifting. I'm not anymore. Kids and COVID, and it was odd. I remember whenever I'd break like a PR doing like a deadlift or something, it would go straight to them before anyone else, right? So it was like I almost had this group where I would want to share everything with and life accomplishments. And it's weird because we're in the process of thinking about planning a wedding, and it's like there's a whole bunch of people that I've met online, I've maybe met once, that are kind of the first names I want to put on a table. And it's the first time I think my partner was like, hey, I get that you spend more time and talking most to these people now. So I think it's just a natural evolution of the digital world we live in, whereby, some of our communities in the real world are being replaced with digital ones. And NFTs are a great way to gain ownership and manage the membership into those.
Well, so this is psychologically 100% on board. The problem that I have, Mark, is there's thousands and thousands of NFT communities. And, whenever a new NFT drops, people say, well, why do I want to be a part? It's the community. You got to join the community. But like, how do you let's contextualize this with your project, Megapont, right? Like, what makes a community different? What do we need to look for? What are you trying to execute with your NFT projects to help stand out, to be different, to not just be another NFT community project?
I think, the biggest sign for me whenever I look at a whole bunch of projects. I'm invested in a whole bunch of NFT projects. I just don't spend much time now in their communities. The telltale is just how financially incentivized the communities are. And, it's easy to say, don't talk about the price of the assets or the floor price. But if you just spend half an hour in there and that's the basis of nearly all the conversation, then you're not really you're going to struggle to build a real meaningful community in there, because everyone is centered around one thing. It's the price of the asset, which is great when the price goes up. But like now, when the price goes down, the vibe changes. There's a whole bunch of people who've lost a whole bunch of money on paper. They're probably just going to be flipping. They're going to be exiting. So you need to go and find the communities. And the important thing to point out here is, if this is really what you're looking for, they're probably not going to be the largest. They're going to be smaller communities. The price might not be the highest. You look at Bored Ape, there isn't a hell of a community in their Discord for the ape holders. What you have is these smaller satellite communities now that are forming for various topics. So I'm invested in a really awesome project that essentially is gating access to sporting venues with an NFT, right? So like corporate boxes, they're purchasing corporate boxes all over the world. And if you hold the NFT, you can enter a raffle to get a ticket to this basketball game or this soccer game. And there's so many apes in there, and their core community is now in there, and they're still repping their Bored Ape, and a lot of the community are in there. But they're finding these hubs and these smaller projects and smaller communities to really narrow in, and their identity might be an ape, but their primary community is probably somewhere else. And you just find those projects that aren't constantly talking about, like, when is this coming? How much is this worth? Or, when is there a token to pump my bags? And I think in Megapont, for example, over the last week, we've had a lot of people come in and just witness a certain difference in vibe. The price of every Megapont asset over the last week, as with nearly every other NFT project, has gone down. But there's nobody really panicking or talking about this or focusing solely on this. And the vibe is mostly, hey, how can we help support each other in this really difficult time? And what other cool stuff is going on, and how can we be optimistic? So they're the projects that you want to be a part of. And like I said, they're probably going to be smaller, less hypey, less pumpy. And it's just going to take a matter of time, right? You can't click your fingers and expect this to land on your lap. You're going to have to hunt for it.
I love, this is awesome. because I just took something away from that, just the idea not only of community, but of membership, which is attached to fellowship. I love the idea, Mark and I, recently bought some VFriends. It's like, so what does that mean?
Yeah.
What do you do with it? What's it worth? And the immediate thought is can I sell it? Can I make more money? But what you're showing us is that these digital assets are attached to value that is not money. That is something money can't buy, which is probably even higher value. The idea of being part of a group of people that looks out for each other. And what I'm seeing now in the realm of personal growth, all these personal growth gurus, from the startup ones to the big ones, they're running these high ticket masterminds that people are spending, in some cases, over $100,000 a year to just be part of this group. Mm-hmm. To network and gain access and all that stuff. So, what NFTs are for me are something that already existed, but it's just a different way of exchanging that currency and potentially having even more value, because now you have an opportunity to make money off of it.
Mm-hmm. Like a country club membership, right? People have been paying for those for forever almost. And an NFT can easily be described as like a country club with a digital asset backing it. Like, selling your country club membership is difficult and if not impossible in many cases. Whereas now we're like, hey, you can sell your Bored Ape. You no longer have access to the club, but you maybe have made some money, or even if you lose. And I think that this is an important thing to point out as well. It's that you shouldn't expect every NFT to go up in value. And if it doesn't, it isn't always a bad thing. A good example, if you've bought into Megapont and you've got a job in the Web3 space from one of the marketplaces who recruit from within Discord, which has happened to, I think, about 4 people now. If you sell for a loss, are you going to be panicking about that or regretting your decision to buy in and sell? Well, no, of course not. You've extracted value already. And even if you spend a year in a Discord and have had a really good year and have enjoyed being part of that community and have, made some friends and some connections that are going to last forever, then it's probably okay to eat a loss in some of these projects. There used to be the joke when I used to play World of Warcraft that the friend game was the end game. And I certainly feel like in NFTs, that is particularly true. If I was trying to maximize my, my time in the space and I wasn't solely incentivized by the financial stuff, I would be just coming into it thinking, how can I network and who can I connect with in these projects and talk to? And how can I build my personal reputation? Because even if the price goes down to 0, people are still going to remember who you were. Oh, hey, I was part of that project like 6 months ago. And, I see you're working on this now in the world. And it's going to be a door into something in the future. There are a lot of smart people in this space. And I was saying this in Discord. I wouldn't be shocked to see, founders of unicorns come from Web3 moving forward, right? And these are going to be individuals and faces that many of us will know from communities. So, just network, get value from the projects through getting to know other members as well. That would be one thing I'd stress.
Your network is certainly your net worth, as the saying goes. Yeah. Hey, what's up? Mark here. Just want to take you on a quick break with a resource I think is really going to help you. Some of the concepts that we're covering in the show sound really complicated and really technical. But listen, you don't need to code. You don't need to get a master's degree in computer science. All you need to do is have the right resources. We're going to make it simple. We're going to make it easy. I've got a link below. Go to www.nftsmadesimple.com. That's nftsmadesimple.com. You're going to get a free cheat sheet there. It's 100% free. What are you waiting for? Go get the cheat sheet. We're going to break down some of the key definitions in ways that are really practical and really simple. Go to nftsmadesimple.com right now to get your free cheat sheet. That's nftsmadesimple.com. All right, let's get back into the show. Mark, there's something you had said on Twitter the other day, and I really wanted to pick your brain on this, because as we go through this, maybe this is the crypto winter or the NFT winter that we've been looking for, but it's certainly a bear market at the least.
Yeah.
So none of us want to be left holding the bag, right? Mm-hmm. We want to make sure that we're either extracting value from the community as it is now or delivering value, developing relationships, but I also don't want to lose thousands and thousands of dollars either.
Yeah.
You know, my wife doesn't want that. My 6-year-old doesn't want that. Nobody wants that. So you had said something that was really interesting. And you said, and I'm just going to quote you here. If you have a bag of NFTs / crypto and want to hedge risk without panic selling, you can and should do that with futures contracts. Can you explain what you mean about this futures contracts?
Yeah, so you know, futures contracts are like an old school financial product, and you can buy them on many cryptocurrencies, and probably I wouldn't be shocked if there are some for NFT assets. I'm not too sure there. And what they enable you to do is get exposure to a price or a future price of an asset, and you can bet both ways, right? So you can't bet that a Bored Ape is going to lose value. You can't do that. But you know, in the stock world, you can bet that Apple is going to go down in value. And you can do that in crypto. You can bet that Ethereum is going to go down. And if it goes up, you lose money. If it goes down, you gain money. Now, and this is a very important point for project founders. Nearly every project has a whole bag of Ethereum or Bitcoin or whatever cryptocurrency it is. And they have that because they can't put it in a traditional bank account because they're decentralized. There is no legal entity. So if someone puts that in their bank account, they've got a tax liability. It's their money. It's just a nightmare to manage. So you should really be saying, okay, I'm going to buy some futures contracts and expect the price to go down. Now, we all say it's not going to go down and it could pump and go through the roof. But what you're saying there is, I'm okay to lose my stake here. So you're not using leverage. You're saying, okay, if I've got like 100 Ethereum, I'm willing to spend 5 Ethereum to ensure that when the downside is potentially maybe $1,000 of Ethereum, I've maybe made $75,000 on these futures contracts and I've still got my Ethereum. So if you need to spend at that point, you know, you can calculate whether it's best to relinquish and take some gains on the futures or sell some of the Ethereum. But you've essentially secured the core principal value. Now there's a cost to this. It's basically an insurance premium. And it depending on what assets you have, depends on, you know, how I think you should secure or lock in some gains. If you, you know, are very wealthy in terms of Megapont apes, you could probably, you know, hedge by ensuring that stacks isn't going to drop any further, although you might have missed some of that by now as well. And that's important to state. When Ethereum drops from 3,000 to 2,000, you might have already took all of the risk that you want to take. You might be happy with that. You know, I don't care. I'm up already. But you might be sitting there thinking is, okay, if this drops to 1,000, I'm in a really bad spot. So I'm going to open up some futures contracts. I'm going to expect it to go down. If it goes up, happy days, because I have a bag and I haven't had to sell any. And some of the NFT projects that I see people with massive exposure to, like, you know, Bored Apes, for example, where if someone's got 5, it's potentially 7 figures of NFTs that aren't very liquid. And not only that, like we've just mentioned, this is part of their identity. This is their access to a community they don't want to lose. So you need to make some sort of deterministic calculation. You know, what is my biggest risk as a Bored Ape holder right now? And I had this interesting conversation with someone on Twitter, and they said they think their biggest risk is probably the price of Ethereum skyrocketing, because will NFTs stay where they are or will they drop, right? Because that's now the risk. At which point, what you might want to be doing is buying a futures contract expecting Ethereum to go up, right? So it flips entirely. And that could be unique to Bored Apes, because when you think of something of Bored Apes, they probably have a USD valued floor, like where there's marketing departments or there's people sitting on the sidelines saying, hey, if a Bored Ape costs $100,000, I'm in, right? There will be a floor for assets like that, where they just won't drop any further. But for typical NFTs, I think the best sort of hedge you have right now is to just say, if the price goes down of Ethereum or Bitcoin, I'm going to be making some gains there to offload the losses of my sort of principal. So it's nothing new. Pretty much everyone does this in finance, and farmers are renowned for doing it when they've got a whole bag of some commodity, and they'll buy futures contracts to secure that, hey, if this goes down in value, I'm not left bankrupt. So there's a lot of stuff you can do there, and we've done this at Megapont. I've personally done this as well, which makes times like this easier to stomach. Of course, it doesn't always play out like this as well. When you see what's happened with Luna and Terra, there's no way anyone in their right mind could have seen that happen. And if you've gone on holiday for a week, right, you're going to come back to everything being zero almost, which is insane. So how do you mitigate risk against that? It's very difficult to do so. And it's similar to like Lehman Brothers as well, right? The whole bunch of people held stock there and it went to zero almost overnight. So it's difficult to completely take money off the table here. I do think panic selling is quite dangerous in these scenarios for a number of reasons. One, you're just locking in like a massive loss. And crypto has a tendency to go up just as fast as it comes down. And you're going to be paying a premium to get in almost every NFT again, almost every crypto. So panic selling maybe isn't the right thing to do. However, calculated selling, hey, I'm part of 20 NFT projects. I spend time in one. Is selling the 19 others a bad thing? I don't know. If you just want to take some risk off the table, then maybe that's the thing to do right now and just consolidate your time into those core communities. So I do see these crypto winters as a time where the best projects with the founders who are building will come out on top, and hopefully it cleans up a bit. You know, one thing someone noticed is there's a hell of a lot less scammers around at the moment because it's less lucrative. So maybe it just cleans up and we're left with, you know, kind of the period of growth we had in startups around sort of 2012 to 2017, where like all of the really big unicorns that are part of daily lives now were formed and grew to the size that they are now. I do think we're probably entering that period now in Web3, because when it's less financially rewarding to just jump in, spend half an hour and get paid $1 million, you'll get the real builders coming in and trying to innovate and thinking of all these new innovative solutions and building cool tech. So we're probably starting to see those people come into the space now, I think.
That's awesome. Well, we're coming to the end of our interview, and I'm a 50-year-old dad, like I told you, and I caught wind. It sounded like you said you're planning a wedding soon.
Yeah. So yeah, I have 3 kids myself.
Oh, you do have.
Which, and you know, Web3 and crypto is great for that, I find, right? Like I get to drop them off to school. I get to be there at parents' evenings and all that stuff, which is great. I will say that around an NFT drop is horrible for the family. Like that period of time where you're just vacant, you're not there, and your mind is always somewhere else, isn't great long term. But yeah, it's super fun at home at the moment. You know, the weather's starting to get nice in the UK. There's a bit more time in the garden, all that sort of stuff.
Well, here's my question, and I didn't know you had kids, so this will be more relevant. And let's look at it time sensitive right now. Not giving people advice, but if you had, you know, because I've got teenage kids right now that are just kind of like starting to learn about this stuff. What would you say? Because it's an interesting time for people to just start learning. You know, all of our listeners are, for the most part, the 98% of people that have not engaged in NFTs yet, and they're learning, you know. So that's the audience that I'd love you to speak to right now. What do you think is the right approach for somebody that's just starting to look, and, you know, they're looking to learn, they're asking questions like, hey, I've got $5,000, where should I put it? Without giving direct advice, what do you think is a smart play for the new, you know, observer or student of NFTs?
If I was completely new to the space, what I wouldn't do is try to figure out where to put the 5K, because you will almost certainly get it wrong, right? You will put it probably into some scam project or some pump and dump or just somewhere you shouldn't. And anyone telling you that they know where you should put it is also probably wrong as well. So you're in this really awkward situation where it's like no one knows what to do with that money. And like when my friends have asked me, I don't want to give them advice because I just know when I do give it, it will go to zero, and they'll say to me, hey, this just wasn't it. So what I would say to those people is, you know, projects, and nearly every single project has a need for additional help in one way or another, right? Whether that's just a community team, or if your skill set's in graphic design, or you're a programmer, I would honestly just try to network into some of these projects and add value in a way that isn't, I'm going to buy the NFT. And I think when you find out you kind of are a part of a project where you feel like you're adding value, then maybe that's where you buy in. And if you can't get an in, or you don't know how to add value, you know, Twitter is again your friend, right? If you just start researching the space and you're talking openly on Twitter and you're interacting with popular threads and other individuals in the ecosystem, I think that's probably the best way to introduce yourself to NFTs, especially in this winter. You know, buying a project is just so risky right now that I think you'd be better off just trying to get involved with these communities without financially investing in them. And then maybe when you've spent some significant time there, you'll be like, this is the one, right? You've spent a week in their Discord, you like the vibe, you've made some cool graphics on Twitter that have been shared. Why not buy it then? And that might be the play to do. You know, one thing I would avoid is looking at like Bored Ape or any of the other blue chips or even Megapont for that and being like, hey, people bought in here at $50 and they sold for 10,000 or 100,000 or whatever, because, you know, really that wasn't planned. Like nobody knew that was going to happen. Even Yuga and Bored Ape, you know, their first utility was an interactive web page to draw in a bathroom on a board, right? To think that they were going to create like a multi-billion-dollar empire from that, there's no way that they thought that that would happen. They certainly, you know, probably deserved for that to happen and execute very well on that. But it's the same story with things like Facebook, right? You know, Mark Zuckerberg probably didn't think that it would become the beast that it is at the beginning anyway. But it becomes a point where it becomes almost like a certainty that something special is being built. And NFT projects are the same. Just get on the ground, get involved with the communities. And right now, I probably wouldn't financially invest because I think the market isn't in a good spot to be doing that because there's too many people thinking of getting out right now. So you'll just become exit liquidity for those.
Man, Mark, if there was just only a podcast that just took all of this crazy stuff and made it simple.
If only, yeah.
If only.
If only.
Well, Mark, thanks for joining today. And really, I mean, I know listen, this is not financial advice. We're not financial advisors, but Mark has just laid down some really, I think, important concepts here. Mark, I feel like we could just go for hours and hours. Like, that's what's so cool about this.
Yeah.
Where can we find you, Mark? Where's the best place to find you and get more information?
Yeah, just on Twitter, twitter.com/Mark Mackenzie without the vowels, which is fantastic. People will struggle with that. So it's MRKMC, or you can just come in the Megapont Discord. So discord.gg/Megapont. You know, I'm basically in there all of the time. You'd be able to tag me in there and just say hi. I'm happy to chat to anyone.
And of course, links will be included in the show notes. Check it out down there. We also, just as a side note, use some pretty technical terms. And if you're not sure on them, go to nftsmadesimple.com, nftsmadesimple.com, and we're going to have a list of some of the more technical definitions so that you can keep up, you can keep learning with the experts just like Mark. Mark, thanks so much, brother.